G'day everyone, welcome back to Pete's Investing. Today is June 27, 2023. This is the NASDAQ price update. You can see here on our weekly, we're in a bullish momentum. On the daily, it's broken down into a bearish. So trade carefully. In fact, I prefer to trade when the weekly and the daily are aligned on the hourly time frame. So first looking at the weekly, you can see there the triple moving average of the price chart and the moving averages of the CCI, as well as our oscillator down here are all bullish, hence giving us this bullish signal. However, notice the price moving averages and the CCI are starting to turn down, and that's in alignment with what's already broken down on the daily. The daily's already broken into a bearish momentum, with all indicators of those three charts showing bearish signals. The price was fluctuating between the 11,808 support level, and it bounced off the 15,285. And it was up and just actually still retracing back from that resistance area. So just be mindful of that. We did have a on an hourly, if you look at it more closely, we do have a divergence currently playing out here. You'll notice here that that high is still higher than that, so it's not a divergence. So we look at it from that point. Initially it would have been to that point if I was drawing these. Let me just draw a trend line. So we start from that point. We initially would have taken it there, but notice on the price chart that is a higher high. So that would have been your first level of divergence. Let me just draw that on the price as well so we can reference the same thing. So that would have been your first divergence playing out. Now, you could have possibly traded that, but notice that the CCI did fall, and so did the price. And that would have been a pretty narrow victory. But what happened is the CCI kept falling. You can see there on the CCI on the bottom, it kept falling. Then it started rising to that point there. Now you'll notice that CCI is still in decline, even though the price has gone up. And then the CCI started falling again, and it's still falling. So that would have been your starting point. Now notice the price did keep going up. So we would have started measuring from that highest point when the price started falling off, and we draw a channel between those highs recorded down to the lowest candle in that range, in that divergence range. So that's our divergence trading range. Now once the price started falling off and breaking out of the channel, which it did there, you'll notice the CCI kept falling. That's where you enter the trade. Now the price did actually go up inside the channel again, so you would have entered the trade there. So what we do now is we draw a Fibonacci retracement, and I like to draw it to the most recent low before the divergence occurred. So you can actually draw it back to there. Let's see what that does to that high. So when it breaks through there, your first target area would have been the first divergence, the first Fibonacci retracement area. So that would be your initial target area on that 38% to the 50%. Okay, so had you gone short there, that'll be your first target area. Now it's fallen off a bit since then, and we're on track to hit our target. So again, just as another example, had you gone back with your Fibonacci, let's pull it back to this level, same sort of thing would happen. The price fell, so I would have taken the next level down here. But again, that's why I choose the closest Fibonacci range for the most recent low to measure your Fibonacci range, because the lower you go deep into the Fibonacci range, the lower the probability of success. So you just got to be careful of that. That's how you try and measure it and get the most beneficial outcome. So we're going to put it back to that low there, and move our target back to there. So that's going to be our target had you entered back there. Now we've missed a bit of the ride there, as you can see. So you haven't got much to gain had you if you enter it today right now. So you've only got a small drop in terms of entering it short now. But anyway, that's how you basically do it. The idea is to get it straight out of the channel, and I choose the closest Fibonacci range as a target area. Sometimes they go much deeper, but again, the lower the deeper the Fibonacci range you go for, the lower the probability of success. Also, just if you need to understand how to trade various trading strategies. We've run a back test here on going long and going short. And again, we only go long and short on these ones when the weekly and the daily are aligned. And then we do that on the hourly chart. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at weekly summaries of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.